Good afternoon, ladies and gentlemen, and welcome to the NETScientific Results and Company Update Investor Presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Please just simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard, and we will notify you by email when they are ready for you to review. I'd also like to remind you that this presentation is being recorded. Before we begin, we would like to submit the following poll, and if you could give your kind attention, we'd be most grateful. And I'd now like to hand over to John Clarkson, Chairman of NETScientific. Good afternoon.
Good afternoon, Mark, and thank you to everyone to joining us today. Welcome to the NETScientific presentation. It's part of our program to communicate directly with shareholders and investors and build up that relationship. So thank you very much. And we're going to do a short presentation, and starting with the inevitable usual disclaimer. Matters are generally in the public domain, and the information will be on our website afterwards, but I'm sure you understand that we won't always be able to quote numbers or the specifics that we generally like to do. In terms of the presentation, provide a background introduction to NETScientific. We're conscious that some people will know a lot about NETScientific, others will know very little, so try to strike the middle ground, an introduction, who the team is, a little bit of background on the history, but most importantly then moving into the future, our strategy, what we've achieved and where we're going with KPIs, and that way forward, and then with a simple summary to round off before we have the full question and answer session. So if we haven't covered matters in the presentation, then naturally we look forward to covering them in the Q&A session. And those of you who are shareholders and have seen a copy of the annual report will note that this year we presented a more comprehensive and more detailed document, which is hopefully useful for you in referencing the business. Just a quick summary. NETScientific is an active holding company, and I put the emphasis on active, so it's not just passively investing, but actively involved in the investment, development, in particular the commercialization to realize returns. And that's from life sciences and healthcare, sustainability, and technology companies. And what we're seeking to do is not only concentrate in the UK, but very importantly, to leverage our transatlantic relationships and build those global opportunities to deliver the essential shareholder value. So introducing the team, myself, John Clarkson, the chairman. My background ranges from a partner in charge of developing services in consultancy with what is now PwC. I've been startup mode, CEO of a startup company with successful exit, and also at the other end of the scale, involved at the PLC level, as well as the range of activities, turnaround and strategy. So a broad base of experience. And Ilyan Ilyev, Dr. Ilyan Ilyev, our CEO, who will be joining the presentation for the second half, a very good rounded experience, both from a venture capital point of view, but as a hands-on investor and strategist with good international experience, including the IP knowledge. On the board, and our objective right now is to have the team to deliver the business today and provide effective corporate governance. We have Professor Stephen Smith, who chairs the remuneration and nomination committees, as well as the group that we're setting up to provide a broader range of advice. Steve has had a range of senior roles and academic roles, not only in this country, but internationally. Recently chairman of a health authority trust, a regional trust. And the great thing about Steve, he combines the science with the commercial experience, so commercial and science combined. We are pleased to have appointed Clive Sparrow as another non-executive director to chair the audit committee in particular, and Clive's extensive experience in the world of finance and accountancy, chairing a community health trust, but also strong business acumen, including time with HM Treasury and change management, and also with Grant Thornton and PwC. So a good breadth of experience. And finally, Stephen Crowe, who is our CFO and brings to bear some 20 years of broad CFO experience in the financial sector as well as services. So a strong team, and as I say, we are building an advisory group to take on the specialist tasks as and when we require them. A little bit of history now. So we go back, NetScientific was admitted to AIM in 2013 and backed by Woodford. And one of the interesting things about Woodford is, whilst obviously the catalogue of problems and disasters that befell, we're seeing signs that some of the companies who were backed by Woodford are in that resurrection mode and success mode, and that's where we position ourselves now. The investments mentioned before, transatlantic, healthcare and IP, and they started out with a very logical initial approach. Take the capital that was available, the model on the right-hand side, and looking to identify the right opportunities, and then help those companies incubate, go through that growth stage, and moving from growth into the commercialization with the objective of capital being returned and release of value to shareholders. Sadly, the hard reality that because of a combination of factors, somewhat passive and inconsistent application, and a high cost base, that the company had suffered right through until the first quarter of last year and was progressively and rejected in all aspects of the business. Hence, we came in as a new team, reviewed the strategy, but quite clearly there was a message that the company had underperformed and was essential. And in identifying that, it wasn't just change for change's sake. It was saying, okay, let's really understand the underlying part of the business. And the simple model on the left-hand side, in terms of lessons, when we looked at the portfolio companies, the great news is that the science in those companies was good. So generally, the underlying principles were sound in those businesses. So something to build on. In the world of science, as many of you know, there's a lot of jargon and almost never-ending research. The problem being that there wasn't enough concentration on the other fundamental aspects, the pounds and the dollar signs, and the concept of delivering within budget and on time. And that was the failure to deliver, and hence the need to introduce robust commercial discipline, which is what we started off with in terms of the management change and approach in that ethos. Really concentrating on the commercial development options, understanding the risk, understanding the options, but applying appropriately. Making sure that the marketplace was right and the route to market with the IP. And clearly it was just at the time that COVID was coming out. Fortunately, not too badly impacted. There was some short-term impact, but the good news is that we do see real opportunities arising from the pandemic. Part of that is making our capital more efficient and leveraging the soft finance, and that's something we'll say more about in a moment. But really focusing on, we have to deliver returns, and therefore seeking to identify the right value inflection points and where the exits and liquidity. The overriding message, though, is that the underlying asset value is there, and a strong underlying asset value. We've identified that and given benchmarks in the annual report and accounts, and Ian will say more about that later. But our strategy now focused on delivering shareholder returns. So last summer, when we were making our investor presentations and presenting the shareholder circular, the first thing we had to do was turn around the business, focusing very much on the hard graft of execution and controls and make sure the processes are scalable. That involved targeting the performance, working with the companies, or making the necessary changes in those companies to deliver the returns, and in so doing, developing the revenue streams. The reality is that one of these further investment is needed, but it's judicious and direct and taking advantage of the leveraged opportunities where there is third-party funding and grants, utilizing those. But it's not a one-size-fits-all. Each of our companies has got its own profiles and requirements, so making sure we tailor to that. There are opportunities where we get cash and there is the potential for those blockbuster returns. So managing on that basis, again, making sure we have exits and liquidity events on, but at the right time. So in the interim, building that shareholder value. Having stabilized the position, we looked at each of the companies and said we have certain things to do to make sure the business can be successful. So short-term actions, what can we do to protect, stabilize, and enhance? And PDS, a NASDAQ-listed company, they're needing funds last year. We were able to come in and anchor that investment round. We spent some $500,000 in new shares February 20, and the price at that time was $1.30 per share. We had a similar investment subscription of £500,000 in August. That time the share price was around $2.75. Now the share price, whilst it has some volatility, is hovering around the $5 per share. So our fair market value as of today is approaching £5 million. At Proaxis, which is a Belfast-based company specializing in the diagnostics respiratory area, one of the problems there was that NETSCIENTIFIC had 60% of the equity, and the other equity, the 40% being in the hands of the founders, but NETSCIENTIFIC was picking up all of the bills and all of the costs and funding the business, which was clearly untenable. So we bought out the minority interests and at the same time bought out the IP, and now on a mission to scale up the business, targeting grant finance last year to recognize the impact of the marketplace from COVID, and we have successfully delivered on that with an acquisition now owning 100% of that business and an action program which is going well. Glycotest, which is Philadelphia-based early diagnostic of liver cancer, where again we were able to concentrate management's efforts on the delivery of the clinical trials, and in the timescale when COVID was affecting site visits, concentrating with a plan to get the results in. We did deliver that, and the team delivered that on site, and in this process, by focusing the effort, saved some $1 million in the relationships there. And Fosun Pharma are our co-investors in that, and have been working with them to build that relationship and rebuild that relationship trust. So again, a good delivery. The other three identified there, Epibone, which deals with bone, specialized bone and cartilage, and in budget board had been a convertible loan. Now, having delivered that convertible loan, looking for further enhancement and development of what is quite an exciting business prospect. GTech, Silicon Valley, again, a loan conversion, and again is going well. And Longevity is the one that is still working process. But just to demonstrate that proactive management we've undertaken is delivering. So that brings us to where we're looking and saying, right, we have an offering. We looked at what we needed to do. We set this out in a comprehensive shareholder circular. This time last year, we were working on that, started developing our plans and presented that in a comprehensive package and set out the new strategic plan. The capital reorganization was relatively simple. It was taking 10 of the original shares, and you might notice a difference in denomination. And the low point, the share price was 1.25 pence. We consolidated that to be the 12.5 pence today. So the 10 for 1 consolidation. We went through a whitewash process with the Beckman Group and Ilya, and we successfully acquired the whole of EMVC on an all-paper acquisition, which really positioned us for further growth. And that was almost unanimously approved by shareholders at our EGM last August. The good news was the placement, which we targeted as 2 million, was oversubscribed, and we're delighted to have new and supportive investors, and no doubt some of you are in the room today. But at that point, I'll hand over to Ilian to take us forward. Thank you, Ilian.
John, thank you very much. And just to finish off on the drivers for the transaction last year, what we saw is that the combination of the two organizations, with NETSCIENTIFIC acquiring EMV, would give critical mass to the combined organization, but also combine two very similar investment kind of focuses, of course, with different styles, and create something that's greater than the two separate organizations. And with that in mind, what for myself now as the NETSCIENTIFIC CEO, this provides an amazing opportunity to grow and create value. It is an organization that is at critical mass, that can do interesting things on the market. There is now a sufficiently good infrastructure that we can do bigger things. But also there is a combined team that has the capability to execute. In combination, I'm able to bring the various networks, capabilities, experiences from my previous businesses to bear on the NETSCIENTIFIC growth opportunity. Now, NETSCIENTIFIC gained several things through the transaction. And what I want to emphasize with this diagram on the left is that we now have the capability of acting throughout the company's life cycle in terms of investment. Now, with those of you with some experience in this space, you know that this different stages of development of the company, different tools are available. In the UK, we've got the EAS investment, which then, of course, follows into classic venture capital deals. There's family offices, there's corporate VC. There is a whole plethora of tools available for companies to grow, and we are able to engage with those and provide or develop the best solution, in our view, for those for the companies we support. In addition to that, I mentioned that we have additional and growing deal execution capacity. You look at some of the things we've done recently. But also importantly, we now have an additional income stream, both through transaction advisory fees, which was not here before, but also importantly through the syndication of deals and the management of that investment, the carried interest returns that we get over and above the balance sheet investment by NETSCIENTIFIC. Now, we are in high tech. We are in two of the high growth areas and high promise areas in the post-COVID space. On the one side is healthcare, with everything that really we're living in a golden era for life sciences and healthcare. And on the other side, there are all the opportunities in sustainability broadly, with the many different subsectors of sustainability, all of which once again are having really a new push globally. And we have the specialist capability to engage with those opportunities, be it the deal flow that we get from our networks or the corporate links that we have, and of course the capability of incubating and supporting with the IP strategy these investments. We have a lot of proprietary deal flow that's coming through our combined networks, and this is positioning us quite well for work in the future. Now, looking at what has been achieved since the acquisition, well, I mean, the immediate one was the doubling of the portfolio to 17 companies. For those of you counting, this includes EMV Capital as a portfolio company, but of course, the 16 here are the holding or investment portfolio businesses. To begin with, all of these are direct ownership by NETScientific, and all of these are carried interest. But as time goes, we expect that these will start mixing up. But what that provides us is with a critical mass, robust, balanced portfolio where every single one of these companies has its own story, it has its own business plan, it has its own development path that we have engaged with and shaped to one or another extent. And therefore, we're able to see how this whole fits together, both on a company-by-company basis, but importantly, as a portfolio. And really, it's the portfolio dynamics that we're getting now that for us are quite exciting. I should mention for each of these companies, there's a lot of information in the annual report on our website and, of course, on the website of the businesses. So we encourage you to familiarize yourselves with our portfolio. Now, we've maintained progress since September last year on the portfolio companies. What John showed earlier was more or less kind of up until September. So since then, a lot more has happened. After the acquisition of the Proaxis stake, we have implemented a number of action-focused initiatives. This has resulted in some things that you don't see, but what's visible is an additional license obtained by University of Geneva, a new distributorships that we've signed with Proaxis, and of course, there's other things that we're doing. With Glycotest, we have now completed the site trials, and this has enabled us to move to commercialization, both on the US side, on the Chinese side, and perhaps beyond. With PDS very much in the public domain, there was an announcement recently that the Brazilian government provided $60 million of funding for the consortium led by PDS for phase 1, phase 2 COVID vaccine trials. We expect this will be a continuing story, but there was also positive pre-interim data on the phase 2, one of the phase 2 trials, things that were started with the funding that we contributed to last year. There have been a number of fundraisers where EMV Capital has syndicated an investment, and this is now added to our capital under advisory. SageTech and SoFund in particular, we led successful funding rounds in those. This has led to increased capital under advisory, but it has also helped us increase our influence. And in turn, this has seen both companies go through significant technical and commercial milestones, which we expect will lead to good things for NETScientific shareholders in due course. PointGraph is specifically interesting. It's an Israeli-based company backed by ABB Ventures and Philips Lighting. They're broadly in the smart building space. And we led a capital restructuring, the setup of a working capital facility and an ongoing investment round. But this has enabled the company to focus on the COVID opportunities emerging in workspace management. As a recognition, they were featured by CNN Business as the future of the post-COVID office. And of course, there's a lot more to do there. Vortex, some of you may be familiar with, again, really strong developments in the last year and in Q1. There's a new CEO in place now, but also consistent with the transatlantic thesis that we have, whereas initially the company, or traditionally the company, had been based in San Francisco and only in San Francisco. We've now established UK operations with a significant part of the hardware side of the business here, working with really strong capabilities in the Cambridge cluster. Further system placements, both with universities and commercially, and continued investor support. And again, each of these companies is a story in itself. We only have so much time now, but we're worth following. And all of these qualitative and quantitative developments, in the end, of course, translate in specific KPIs. Starting with the share price, as John mentioned, last year we reached a low point of 1.25 p old money, 12.5 new money. It has moved around during the year. The average for over the last year has been 55p, or I should say over 2020. As you know, there were certain spikes, and it continues to hover around that level. In terms of the loss of the year, 2019 was less a small loss than 2018, and this trend has continued in 2020. But what I should emphasize here, that given our holding company structure, where we have companies such as Glycotest and Proaxis that are holding companies that are investing in new technologies, new products, this translates into losses at group level. So the loss in itself is not a bad thing. it can represent investment in the future. The reason we have this drop is because of the further cuts in waste that we have implemented and the further streamlining of the organization. We're running a much more efficient business now than I would say historically. Apologies for this busy slide, but I'll try to take you through it. And this is where it comes to the bottom of it. The difference with NETScientific now is that we have a mixture of subsidiaries, directly owned stakes through investment from balance sheet, and interest in the companies through capital under advisory, where we've syndicated deals and we're taking a cut through carried interest or shared profit, classic VC style. This is quite interesting because it provides the company with multiple sources, multiple offsetting sources or balancing sources of capital growth. Turning to the fair value, we've seen an 80% increase in fair value over the year, going from 11.8 to 21.2. Now you could say, well, yeah, that's the director saying that, we'll do our own maths. To that, what I would say is that we've taken a conservative approach, whereby we're measuring fair value on the basis of historical costs or the most recent investment round, even if that round was some time ago. We are not taking into consideration in the fair value our expectations of growth. And as you can imagine, we have such expectations. Now we'll continue to, we anticipate further increase in this going forward. And this will be both through driving value in the existing assets as the value inherent in the portfolio crystallizes through the various measures that ourselves and the management teams are putting in place, but also through appropriate investments. Now, in addition to that, there's the capital under advisory that I mentioned. Of course, last year, the beginning of last year, this was zero. Through the acquisition of EMV, it went from 0 to 14.6 million. But what we also wanted to show you here that EMV Capital in itself has had a good year last year in terms of growth in capital under advisory. This will continue to grow through further funding of the existing portfolio, the existing bigger portfolio, where EMV Capital almost acts as an in-house corporate finance VC to the portfolio, as well as new projects, new deals that we are looking at. This is not just blue sky. It's based on a fairly well measured and purposefully executed pipeline of further deals and transactions, both within 2021 and beyond, of which we have visibility. And this brings us to the business and financial plan going forward. And as we've hammered throughout, we now have a stronger financial base with new and recurrent current income streams, as well as capital realization opportunities. Importantly, and I can't emphasize this enough, we now have a capital light model that we've shown since September that can work, where we're combining judicious and direct investments from balance sheet with syndicated investment through the capital under advisory mechanism. That kind of gives us a greater influence with less balance sheet than would be the case otherwise. And in addition to that, combining it with soft funding from public sector grants, whether it's in the UK, US, or elsewhere, as well as corporate joint development agreements, all of these we feel provide enhanced returns than the alternative model in these very interesting sectors. We'll continue to establish the necessary resources and the infrastructure to deliver the strategy. The strategy, of course, while we have the broader strategy, the implementation evolves over time, so we identify resources that we need. But I think importantly, we want to operationalize further the transatlantic initiatives or vision that the two companies that had prior to the combination last year. And we've launched what we call internally the Transatlantic Bridges Initiative, where we're looking for two-way traffic between companies. And it's not only about transatlantic for us does not mean let's take money from the UK and throw it in the US. That's not interesting. What that means for us is helping UK companies expand in the US and international markets with advice, with networks, with funding opportunities, but also with hands-on local presence. And vice versa, the US portfolio companies we have, actually, they do have passports. They are interested, or at least some of them, they are interested in expanding into the UK and internationally, and we are able to provide that with our local networks. And this will be something you hear from us in the months to come. So what is the way forward? Well, we'll continue to utilize and leverage the asset base we've got, the PLC brand, which is strong in the UK, but it's also strong internationally. It matters to people that we are a listed company, and to harness the group synergies, not only within NETScientific and the old EMV Capital, but also synergies between the various group companies. And just specific examples of things that we have done. Our focus will continue to be on life sciences, sustainability, and technology. But again, I want to emphasize we are not a passive investor. There are many good passive investors out there. We're not one of them. We are active and focused. So with everything that we do, we go through a structured and robust evaluation. We go through the projections with the management teams. We build that into a model both at company level and at portfolio level. And with the combination of this information, we have good knowledge, or good guess at least, of where the investments needed will be over the next 3 years, not one, but over the next 3 years. And that in turn enables us to make better informed judgments, or should we invest more or should we look to exit? We're measuring this both to clear milestones, but also setting up quarterly KPIs on which I'm measured by my board, as well as rolling 12-month actions, so we have visibility on what needs to be done, and once again, a 3 to 5 year planning horizon. All of this, we feel, will enable us to scale the investments that we have and the future investments we will make. We're focusing on high growth opportunities in the post-COVID environment in our sectors of focus. And you know from the media and from your research and from what you hear from your networks, there's a lot of changes happening in industry. We're well positioned to engage with that. We also have effective and we think effective and preemptive risk management. And again, there's a few mistakes we've helped management of our companies not to do over the last year. But last but not least, we want to focus on realizing profits and maximizing value with these businesses, and of course, evaluating new opportunities. In summary, look, we are very in technology. You hear lots of buzzwords being thrown around, and the buzzwords rotate, and year on year they change. We have a very old-fashioned and bricks and mortar focus approach in the high-tech space. We want to combine good science with hands-on, common sense commercial management and smart investment approach to deliver returns to investors. With that, I hand over back to John.
Well, thank you very much, Ilian. I hope that's illustrated to the audience today what we're actually doing and how we're doing it. Just to summarize, therefore, clearly there are risks and there are obviously challenges, but I think fundamentally NETScientific is in a completely different place than it was this time last year. We do believe we have the right asset base. The fundamental is that portfolio companies are good companies. It is the right space. Life sciences, healthcare, very much the four huge opportunities arising for us, both directly and in value terms. And it's the right time to complete this transformation of the business, creating and growing that essential shareholder value. So it's really a staged operation now. We've still got to complete the turnaround. It's gone well so far, but it's hard work and it's hard graft, and that's the basis of delivering it. And we do focus on aligning the underlying asset value, which we've identified very clearly, and Ilian's expanded on in terms of the fair value and on the assets under management and the carried interest that brings. And over and above that, it's that future potential that each of these offers, which is still not aligned with our market cap. So that's objective one. Secondly, to continue to develop the portfolio, and in parallel with that, looking at the new growth opportunities. Some of those will come from the portfolio, others come fresh, but continue that growth, but by firm application of commercial principles. And as a result of that, we're in a great position of having multiple prospects now. It's not just a single or one or two shots on goal. We really do have multiple prospects and the potential to realize significant shareholder returns. And speaking not just for Ilian and myself, but for the whole team, our commitment is to deliver. So thank you very much indeed for your patience in listening to us, and happy to take, I can see questions are coming up, so we'll try and answer the questions as we can work through them. Thank you.
John, Ilian, thank you very, very much indeed for the presentation and the update. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the company take a few moments to review investor questions submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet Company dashboard on the Investor Meet Company platform. I'd also like to remind you that your feedback is important to the company, and immediately after the presentation has ended, you'll be redirected for the opportunity to provide feedback in order that the company can better understand your views and expectations. John, Ilian, obviously we've had a number of questions that have been pre-submitted, and of course you can see there are a number of questions that are in the live channel. What I'd like to do is, if I start off with the pre-submitted questions, and then I'll address you to the Q&A tab and ask you to read out the questions where it's appropriate to do so. But the first question we received ahead of today's event is, what does your pipeline of potential investments look like?
Thank you, Mark. Maybe if I'll take this one.
So, Billy, do you want to start with that?
Yes, sorry, there's a bit of a delay. So I think in terms of our pipeline, first of all, organically, we get a lot of deal flow from the market. Simply, if you're in the market and you're doing interesting deals, things come to you. But also, we have strong networks with corporates, universities, investment partners, and so on. So there is a good set of opportunities coming to us regularly, both from both in the life sciences and sustainability space. In terms of our current strategy, our focus over the last year has been, number one, to service and support the existing portfolio. So at the moment, I would say most of the actively focused opportunities are focused on the portfolio to support the existing businesses. But we do anticipate looking at new opportunities as later in the year, and there's a number of things we're looking at the moment.
Thank you very much. The next question we received is, which of your current investments has outsized return potential?
John?
Well, that's a wonderful question, and I'd like to say all of them. But being practical about it, I think we should go back to the basic principles. We are a holding company and with an excellent portfolio of investments. So we've got an excellent range of investments, and of those, each one is individual. And we also start with something of advantage now, because in some ways the original NetScientific portfolio had been cleansed, and they are the survivors that are there and the ones that are strong that are there. So the ones we've got are going places. And also from EMBC, these are the ones that have been carefully chosen, nurtured and developed, and are progressing successfully. So we have a very good portfolio to start with, and out of that portfolio, success, I think, rather than outside returns, is what we'd like to concentrate on. They will deliver in different ways. Some of them have the potential for significant revenue growth. Others will have the opportunity through the value inflection points to hit that multiplier return as each level is achieved. So I think in that regard, we can certainly look at it. People will be familiar with the marketplace of some of the multipliers that can be achieved in this sector, and we have a handful that would fit into that category that can deliver those outside returns. But we want to balance that also with practicality and timing. Ilian may want to identify the cherries, but I think give him the opportunity to come in at all of them.
I mean, what I'll say to that is that, just like John said, for each of these companies, the reason that they made it through our filters is because the potential is there, and the potential is for really, really large multipliers. That's the easy part. I think what we are looking at with these businesses is more the financial engineering in a positive sense. What are the optimal points at which we should deploy capital in these businesses? How to make them capital light? Because as we all know, in the venture capital space, companies can be really thirsty, and we don't necessarily subscribe to that model. So it's hard graft. For each of these companies, we're looking at their funding strategy and on a continuous basis, and making decisions as appropriate to maximize our return in the medium and long term.
Thank you. There is a question in the live event that's come through that I'm going to add, if I may, to the one that was pre-submitted. It says, what is the ultimate size of your portfolio, both holdings and investment-wise, and how will this evolve? And the other question is there a maximum number of portfolio companies you look to hold?
Okay. John, I'll go first. So I don't think there is a magic number. We're looking to grow our portfolio in a balanced and sequential way. There are natural limits to how large we can get because our approach is proactive, and we want to understand what's happening inside these businesses and to have some influence. So it will grow. It will grow in a natural and sequential way. We're not after numbers for the sake of numbers. At the same time, we do believe we have a scalable model. Therefore, there is scope for growth. I would also mention that within the existing portfolio, companies go through cycles, and for some of the companies in our portfolio, we are much less active than we used to be, and that kind of frees up management team capacity to focus on the next ones. I hope this answers the question. John, do you want to add something?
Yeah, I think in some ways it's also worth looking at the other side of that equation, was that we believe to be having a sensible portfolio. So it's more important in the first instance that we had a good portfolio in order to balance the risk. And I think, as Ilian demonstrated with the company logo slides, we do have that established portfolio. And that breaks down into the three elements which we show in the appendix. So there are those few that are wholly owned subsidiaries, or where we have the control, which clearly take more intensive management, but in some ways provide greater opportunities to provide that thrust for the business going forward. We then have those where we've got a significant stake and are very active, and we have the carried interest, the assets under management. Now, there are a few also where we have a stake where, in truth, we're not that active, but the companies are doing very well, something like Cytovale, where there is the ongoing development processes. So as we build, we are going through a structured evolutionary growth. And through that evolutionary growth, we're growing the team, we're splitting the responsibilities effectively across the team, and we've set up an effective data management system. So we're putting in the infrastructure in place so that we have a detailed data analysis of each company. We've got a dashboard overall that we review, and then we've got financial projections going forward on a 3 to 5 year basis so we can manage it. So we've put in place an infrastructure that enables us to grow and manage that growth, to give the board effective control and management information. So it's a combination of factors, and we are set up for that 3 to 5 year horizon, starting already with a turnaround, but we will add where appropriate and grow where appropriate, but we won't expose ourselves to unnecessary risk.
Thank you very much indeed.
A long-winded answer.
No, perfect. Thank you. The next question is, when and how can we expect you to realize some value?
John, do you want to continue?
I think that's got. Yeah, I think it's got two sides to the equation. When we say we, I think there is the we as a shareholder, and from taking the shareholder perspective first, we hope we're delivering that value. And as we've demonstrated Ilian's slide, it was the pre-COVID position on the share price. So despite COVID, the share price has moved. People who did buy shares at the very low figures of 2p, all in the old money, or 20 pence in current money, are already realizing the first level of value. And it's up to the individual to determine at what point they may want to release that value. Some people may say, I'd like an early profit, and other people may say, this is just the start of a very exciting and, we believe, profitable journey, and we'll stay with that. But I come back to the point I made earlier. The first clear milestone is to have the market cap and the consequence of the share price reflecting that in line with the underlying asset value. So that is the first level of delivering returns and the time scale for so doing. And we see that being already underway, and step one, which should be largely complete this year. Then, as we move forward, it will be about the opportunities. We have to balance, even with the leverage model, and support the companies with further investment to make sure that additional investment enhances the position and takes us to the value inflection point. So it's that model of managing not only the science and the development process for commercialization, along with the time and cost it takes to get there. But we would like to release some of that value and bring that back into the company. But the timescales are going to be about the opportunities and where we hit the value-added point. So we're not driven by time per se, but by realizing the right level of returns and the right price for that. And an interesting analysis of that is using the PDS example. PDS is where we see in the marketplace, because it's NASDAQ listed, everyone can see that, and it's easy for us to put up the hard numbers of saying we bought at that and that's the current share price and here's a return. PDS represents, it's a bit like the tip of the iceberg. It shows the 1/10, and very often Net Scientific share price seems to be a reflection of that 1/10 of the visibility of the company. But the 9/10 of the company, the great mass of strength is underlying it, and we will be working over the coming months to deliver that and see the tangible returns. But I'm afraid I can't give you hard times and hard commitments or solid pound sign that go with it.
Thank you very much indeed, John.
So, you want to add anything?
I mean, I'll just, John, it's an excellent answer. I'll just add to that from a proactive perspective. In terms of looking at the right exits for the companies, we are fact-driven. We work with management, closely with management, but also a big part of our strategy is to be quite close to the corporates in this space, and therefore we have early visibility on developing trends in certain markets, and that hopefully enables us to have the right conversations at the right time. But I think we want to emphasize we're not looking at exits at any price. You know, ultimately we're looking at good investment returns and the right times to exit a investment through whatever channel it is that we do that, and it might be a full or a partial investment exit.
Thank you, Ilian and John. Well, look, I'm just mindful of time, and I'm mindful that you've got a number of questions that are coming in during the live event from investors. And perhaps, Ilian, I could and John, I could hand back to you to click on that Q&A tab and just really read out the questions, perhaps who they're from, and give a response where it's appropriate to do so. And of course, any questions that we don't get around to answering during the meeting, we can review post the event.
Okay.
So over to you guys.
Certainly, thank you. If I respond first, Bhavesh, I see you come up with two pretty direct and hard questions, and I think in some ways they are linked together. So if I read them out, the shares have been pretty poor performers since the placing. They have traded pretty much the entire period below the placing price. What is the company looking at doing to address that? And I think the second one links in the same way. The company has done very little shareholder engagement via social media outside of today's investor meet. It would be useful if you could keep the story fresh by upping this. Is this something you will look at going forward? So the direct answer is yes. This is the start of a process. We felt the first thing we had to do was to get a grip of the business and concentrate on the business, and rather than coming up with glib statements and we're going to do it, we've tried to concentrate on the actions speak louder than words, which is why when I was referring to what we set out in the shareholder circular last year and in the presentations, we have done and have delivered those tasks. We would agree that it's a disappointment that the share price still doesn't fully reflect or in many ways not even close to fully reflecting the underlying asset value. So yes, this is one step in that process, and our commitment is to engage much more, to take on board your feedback, take the hard questions. That's why we're here, to take the hard questions. We will not only reflect and give you answers today, but we will work on that. So explicitly, we will be having more engagement, more up-to-date news, and we have good news in the pipeline, and we will continue to communicate that as soon as we can and when it arises. But we, as I say, we needed to get on with the draft. It has been a focus on the business, and that's what we have been doing, and the results are coming forward. But Ilian, did you want to add to that?
No, I think it's nothing to add. Maybe John, maybe if I take the next question.
So expect to see us back on this platform.
Sorry, please go on.
So I was simply saying we look forward to coming back on the platform here for a further update before too long.
Maybe I'll just add, we welcome any ideas around ways in which you think we can better explain the information on the website. So feel free to email us with your suggestions as well. Okay. Maybe if I take the next question, which is again relating to deal flow, how from Andy M. Hello, Andy. How competitive is it to source the right transactions at the right price when you see the deal flow, and how much of the deal flow is proprietary? The answer has two parts. One is within the existing portfolio company, a portfolio of companies. Because we are an insider or quasi-insider, of course, we're able to track the companies, understand their plans, whether we're on the board or not, and time our participation for when is the right time for us. And of course, when companies need support, they go to the existing shareholders first. So we're in a good position there. I would also say that where we're looking at the more earlier stage companies, there is an attraction they see in us because they see an institutional investor that can provide smart money skill set beyond financial resources. So people, I would say, people want to work with us. When we're looking at new deal flow, and I touched on this point earlier, we get deal flow from everywhere. And the old saying of marketing, 50% of marketing spend is wasted if you only knew which 50%. So we get deal flow from all the sources you can imagine. But the good and strong and interesting deals that come to us are from the network that's close to us. It's the investors with whom we've worked with in the past that are sharing deals with us. It's the corporates with whom we have a good link on the corporate VC side or corporate development, as well as entrepreneurs that we've worked with in the past CEOs that are showing us deals that they're involved in. To look at it from their perspective, I think what they like is the flexibility and what I showed earlier on. Try to get to that slide on slide 11, I think it was, the ability for us to play across the whole life cycle of the businesses, because when we invest in a business, people know that, look, actually, this is a partner that we can work with in the long term. So I hope this answers your question. John?
Looking at other questions, thank you, Ryan, for your question. How do you see EMB scaling its operation to benefit the wider portfolio? And are you looking to expand its geographic reach further? You might expect me to hand this question over to Ilian, but in the first instance, I'm going to take it. Because when we were looking at the NetScientific strategy a year ago and said the company had run down effectively to no full-time employees, and how did we actually grow the business when the balance sheet was non-existent effectively? So we looked at this at the time, and this is why the strategy led to the shareholder circular and the acquisition of EMBC. So from a company point of view, we consciously acquired EMB using paper to do that. So it was an effective acquisition for us, specifically that it would help scale the operations. And as Ilian has pointed out, in scaling that, it was about the portfolio in the first instance to exploit. But as we're already exemplifying, it's no longer all balance sheet, and we are looking not only for the UK companies, and as we described, already helping those UK companies, either with or without the Net Scientific basic anchor investment, to leverage and bring in more money from the syndicated investments, which is happening not just in the UK, but we are already exploring those opportunities in the US, and we are looking beyond. So whilst Ilian has talked about the transatlantic bridges initially through the UK, those transatlantic bridges, clearly now for us, one of the advantages is to look into Europe and beyond, and in due course we hope to be explaining that, but also taking the global opportunities. Goes right back to the introduction slide of what Net Scientific and expanding that geographic reach with the benefit of EMBC's A, resources, and B, expertise, and the advantages of that network. But I might have still on your lines there, Ilian, but hopefully it's a fairly accurate representation.
It is, and I'll just add to that two elements. I mean, one is EMV, before its acquisition, EMV Capital was a bootstrapped business, and what I mean by that is that it grew organically without external investment, and that means that part of our DNA is running things very efficiently and having an above size footprint internationally. And what that means is that we built a fairly significant network of advisors, venture partners, and other friends internationally, not only in the UK, but across Europe, in the US, Asia, and beyond. The network I mentioned before, the network of corporate VCs, which by its nature is global, and in a way that gives us the scaffolding of what we want to grow. It's for a small company, we have a fairly significant global reach in our sectors of choice. In turn, that enables us now to grow faster and more capital efficiently than you would expect in other cases. So it's a really exciting opportunity for both myself and the rest of the team.
Ilian, John, thank you very much. I'm just mindful that we're coming up to the hour. I don't know if there's anything else to address, or if not, if I could just ask you perhaps for a few closing comments. I know investor feedback's important, and then we would divert investors to provide you their feedback.
Well, I think for me, it's to say thank you. And as I say, it is the start of a process of greater engagement, and the questions are valuable. I noticed that Andy M had asked what is our timeline or rationale we're looking for realizing returns and recycling capital. I think we have indicated those. It's turnaround, growth, and results. Right now, we have had to look at that balance in terms of the portfolio needs, and that's been our preoccupation, securing the home base first, and we're still committed to that and to delivering on that basis. We do realize that people are investing to get attractive returns, and that's what we intend to deliver. But we are looking at it from what is the best value, not just we need money quickly. So it's not looking to say we're making an exit or liquidity event just for the sake of demonstrating it. We're adopting a professional and business approach, saying if that's the right time and the right deal, we will take it. We will not stay in if it's wrong because we can take more money now. So it's careful evaluation, and that will be the basis that we'll go forward. But we are very conscious of that, and ultimately that's why investors are with us and will stay with us, because we demonstrate we're committed to delivering those returns, and that's our mission. Thank you. Ilian, do you want to closing comment?
Thank you, John. Well, I think join us on a journey. Last year, when we took on the challenge of Net Scientific, many people believed what we're trying to do is not possible. Less than a year later, a significant part of the turnaround has been completed with a positive result. This is now a business that can do business, but it's the beginning of the story. This is a model that can scale significantly in some really high growth markets globally. It's a UK born, but organization with global reach. So we hope you join us on this journey and stay to reap the rewards in the long term. Thank you.
Ilya and John, thank you very, very much indeed for your time and being so generous with the Q&A. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide feedback. If you access this meeting from our website, then the feedback page will appear. But if you access this meeting via the link sent you by email, you'll simply be asked to log back in to submit your feedback, and we'll be most grateful. And I think the company would greatly appreciate any comments that you may be able to provide them. On behalf of the management team of NetScientific, I'd like to thank you very much indeed for attending this afternoon or this evening's presentation. That concludes today's session, and thank you for your time today.